FXBros.
Oh, what up, people? What up? What up? What up? We back. It's Sunday, June 30th. We're approaching the end of the month, and I believe this is we're about to starting Monday. July 1st is the start of the second half of the year, also the start of the third quarter. So, as we know, things probably are going to be starting to shift as far as volume, because we know things are going to shift in the later months of the year around the holiday season. Certain pairs tend to see a retracement on those months. Nonetheless, very large moves I had. Just for any type of pullbacks or continuations typically happen around the holiday times. Just getting everybody set up, getting the markets reprogrammed and settled for the next year. As far as what we're looking at right now, the market opened here with a gap, which is strange. See, does the market typically open in gaps on Sundays? Nope. So that's rare. We got a gap that opened up on Sunday right here. Market actually opened up here at 66.82, which I know I was busy, tired of doing something else, but I should have been a little bit more attentive because I could have took profit, but I still have targets above here. Still in buys from last week, holding some tester positions. So I still have take profits, I believe, in 66.90 to 70 cents in that range. So we're gonna see how the market plays out. It already pretty much filled this gap, so this candle could very well turn around and become a bullish engulfing, especially if we don't take the low of this wick. We don't test this low and the market reverses around, being that this is the open of the new hour. That'll be nice to get us started into the new week with the bullish continuation, because I ain't gonna lie, last week was crazy. As you can see, I'm gonna put it on the screen pretty much just so we can just visualize. This was pretty much all last week. That was Sunday right here. So that bearish candle. So right here, this bearish candle. So this was all last week. Of course, you can kind of visually see the bullish structure kind of playing, especially with the lows. Lower high, lower high, lower high. But then you get a Thursday sell-off that kind of cancels out all that bullish momentum. But now that looking back, we see that this was all structured support, and basically the end of the week was just gonna make it was gonna complete its case, you know, as far as like deliberating and shit, to say that we overall are bullish. And we got that confirmation once we swung not only the low of the whole week, but primarily we go into Sunday. That was the low of the week. So basically low of Sunday. And yeah, not the low of last week, but definitely the low of the current week that was being created. So this Sunday's candle with this wick was at 9 p.m. on NYC time frame. We had a low of 66.26, and then on Thursday we completely attacked that with that evening sell-off, and I believe it was news, Australian news. I'm not sure which news release it was, but well, yeah, I think it was on Thursday. I'm not sure. I have to double check, but nonetheless, structure-wise, the market did take out liquidity of all these lows, all this potential bullish structure that we were kind of, you know, coming to a conclusion into our heads that we were going to see the market kind of shoot off in a bullish kind of pattern within the week. But as we see, coming from this point of the low that was created for the week, the market had a high that it could test. And it didn't have to go this high. And granted, this level right here, if this would have sold off heavy, this probably would have been the sell we was waiting on. You know, maybe like a nice little retrace to this area, or maybe to this gap, to the support turn resistance, and then a continuation sell-off. And the reason being because from this high of last week, this was like still in structure to have a lower low created. And, you know, and it was taking out these double highs right here. So we see, you know, with this wick high, and this wick high, we all kind of join that into a zone. You know, you see the market took out that zone and then sold off. So it had every right to take out the low and possibly break this low and continue for a retrace up in here. That never happened. The lowest we got was this first initial structure on this bullish push right here after we created the low from Sunday. This first leg on this bullish structure, we swung that area. So that was a crucial point. But like I said, overall, we didn't take out this low yet. So within that week, we were still thinking we were going to be bullish, especially with the market reaching up this high. But as it didn't and it rejected, even though we didn't get a bearish engulfing like we would like to actually confirm this trade, we look at, well, it could be a potential swinging above this liquidity and a sell-off to continue us, you know, into this bearish market. But now, if we take a look, zoom out, we see exactly how much consolidation we really were in. We've been in consolidation for a minute, so you can see how just the notion of it breaking this low wasn't really the low. Like, this was really the low to break. I would say a smooth 65.90, 65.80. You know, and we never came close to this first initial structure of this low created on Monday, June 17th. That first leg on that bullet structure was at the price of 60.02, 66.02, 66.04, up in that area. And the market never saw that last week. Like I said, we came as low as the low of the current week that we were in, you know, after we swung that low from Sunday. But that was pretty much it. So that's pretty much all the market came to do. And from that point, still no bullish engulfing that we would like to see to qualify to buy. But nonetheless, structure-wise, we saw what the market was doing. Overall, this sell-off was simply just filling this gap. And that low created from that was actually liquidity. And that's what we saw on Thursday. And prior to it sweeping the low, which it did at the end of the week, you know, Thursday night. On Wednesday morning during London, we swept the bullish liquidity, which was overall last week's high, which was pretty much created around Wednesday or Thursday on the 19th and 20th. Yeah. Pretty much the 19th and the 20th of June, that high was swept Wednesday morning. And I think that was CPI doing that. So that wasn't normal. It wasn't like a normal algorithmic structured play. So that was strictly imposed upon how the markets reacted to that news release. And as you can see, not only do we react strongly, and look at how this area where we thought we were bearish from this liquidity that we had coming from Friday and Monday, those highs. See how we swept that, and we thought like, well, this could be the sell we were looking for, especially after the market dug deep into this retrace. Look, in hindsight, we could say that it wasn't much of a retracement, but in that trading week, we saw that there was much of a retrace, and we would need to see a high get swept, a strong high, strong level of liquidity. We attempted here, but that still proved that this was a strong level. And until we swept here, that was more confirmation that we might be in sales. And wouldn't you believe, right before CPI came out, it tested that low that we were expecting to actually break the ultimate low of Sunday. So that's showing you how strong this level, this zone right here of support is. Nonetheless, the low of the week, but let alone within that week, we had a level of support being formed at 64.40, 64.35 at the low. In that range, we had support being formed. So still in all, for it to still have another level of manipulation that it could try to form, it had that level of 66.40, 66.35, and the ultimate low of Sunday, the low of the week from Sunday night on 9 o'clock. And that low was 66.26. So for us to continue bearish, we would not only need to break those lows, but the next market pullback and retrace higher would need to pretty much settle at the 66.20 to 66.30 area. So we would need a pullback to this area, and we would need to see like a bearish engulfing right here for this to be a true sell. Because we had like a head and shoulders pattern here, and then we see the market sell off. And for it to continue, we would need that type of situation happen, or at least to come high enough to potentially maybe fill this gap and then sell off. That never played out. The market turned around and continued higher, and that's why I'm thinking overall, especially with the feel of this this bullish mood that we had from the week of the 17th and 18th of June. I feel like the market's it's done what it came to do as far as that retracement, and I feel like the bulls still are in play. Now, if I pull out what I've drawn on my chart, so you can see that we still in consolidation, even though we at the highs of this consolidation, but we're still at consolidation. This is where I drew the consolidation initially from these points right here. Until then, the market swept out of that consolidation box and then traded back into it. So that was kind of considered a fake out. No bounce off of those support turn resistance to continuation for sale. So the market traded back in, and not only that, after sweeping that liquidity, where did it go? It ran back up to the bullish liquidity, took out those highs. Now, since then, still undecided, and pretty much in the last month of the quarter, the market turned back into consolidation. But One key the thing that it didn't do, and if it doesn't play to the downside, that's even more added to the bullish potential of this move, is the market didn't touch the low of this range, this whole consolidation range. Like how we had these range plays off the highs and the lows, some trading outside of the consolidation box, some trading above it. But June 17th was the last time it touched the low. Since then, we've been kind of near the highs, even though still in consolidation, but we've been kind of up in this more what you call it, premium range. If you're looking at it from a high and a low, 50% of a zone. You got the bullish range of that 50% is the premium, and the lowest of that 50% is the discount. So we've been consolidating the premium of this whole range. And as long as we continue on this bullish trajectory, even though after we've been in this level of consolidation and swept the low, so this whole same range of consolidation, just like we swept the low here and never came any lower, and now we continue in bullish. This level of consolidation was the same situation, swept the low, potentially looked like a fake out. Now we pushing back higher. So what we need not to happen is ultimately the market taking out the lower last week or the lower Friday, which was 66.20. And right now we at 66.68. So we got a long ways to go from that area, but that's what we don't want. We got a lot of gaps we could potentially fill. I do like this one ultimately. I'm gonna draw. Try that out a little bit. Yeah. I'll probably take this off after we push. If we don't take out these lows, I'll take out this gap because we done traded through it already. Moved on. Same thing as this 1 hour consolidation range I got. The market's still kind of respecting it somewhat. So I'll cancel that once we push above back into 67 cents if we get that high. Taking out the high of June. The high of June. So yeah, July pushes higher past 67.05. Oh shit! Before if it takes out 66.90, I'll take out this range, both of these, and we can kind of focus more on the bigger picture, which is this larger range we got right here. Still got this 4 hour gap that we've been respecting that we could break through. So this week potentially is, for one, go clear up my charts. I know it might look like a little confusing to a lot of people, but it's just different zones and ranges that I'm looking for the market to respect and seeing how it respects that. Like I said, from this week coming into these sales, because I pointed out the sale we got in right here on this engulfing, then another one here. We were testing the market to, being that we were coming back up to this wick and ultimately tapping into this gap up here at the very minimal. We saw we swept that high right around here with this wick. We thought that pretty much was all the market needed, to be honest. So we were expecting the market to sell off, kind of looking at this bearish momentum and then this bearish momentum. But one thing that was key in this same scenario would have been more leaning to more of a bullish scenario if this high never taken out this structure. If we would have had market come up right up into this gap right here and just turn around, that would have been more played into our bearish structure, because then we would have been showing highs not taken out. So if highs not taken out but lows are, then that means we have lower highs and lower lows, which is the pretty much the definition for a bearish pattern. So we're gonna continue to monitor this. Like I said, I'm still going with the bullish trajectory. I think if anything, we could potentially come into this range. So just as a bearish target, just for all the bears who probably looking for sales, maybe to sell off into this range. I will look for targets around here. At least take off 50 to 75% of your trade right up in that area. I think that would be smart. So we'll see. Obviously, I really don't want the market to go down that, because that'll put me in drawdown. But I'm open to this pair. I know what it can do, so I'm not going to be oblivious to the different type of moves that the Australian dollar does. Which brings me to another thing. Me and Jay were talking about actually stepping into other pairs to trade. Probably won't be doing analysis on it, because we really want to stick to Australian dollar. But just to be mindful of the other opportunities in the Forex market, especially looking at interest rates. And the Australian dollar and the US dollar have not similar, but very close as far as in their numbers, as far as interest rates. But when you look at the Australian dollar, the German pound, the US dollar, and what else was it? In the euro, and you compare that to the yen, that's where things get fun. And we kind of just looking at it as a hedge to the entries that we take on Australian dollar, because honestly, trading this pair has put us through the gauntlet. So any other stock move, S&P type of situation, we more than prepared for that trading this pair. So just to be smart about it and be savvy investors, we're gonna look into the GJ, the UJ, the EJ, and the AJ as far as hedges against the Australian dollar. So when we are in certain drawdowns or taking losses, we know there's an easy play on the other side. And I'll just quickly show you. Go to the daily candle, take off all this. That's it. Put the link in. So basically, we're looking at the daily charts, right? Australian dollar. Not, sweet moves. And we're gonna look at it just for the past 2 years, 2023, 2024 to now. Kind of if anything, a bearish trajectory. We zoom out some more. See, yes, it is bearish, but now more kind of in a consolidation, and look like it's ready to pop. Like it's just been. I was getting right into that. You know, it still can come down here and do all that type of shit, but I see coming into that next presidency, we definitely got some new potential moves and ranges we can reach, new heights we can reach to with all these different currencies. But nonetheless, this is a daily chart, and I just want to show you the differences between this and the pairs paired against Japanese yen. UJ, see that? DJ, AJ, EJ. I think gold is kind of on the same situation. And nonetheless, we just looked at this as like, okay, obviously with the differences in their interest rates plays a big part in all these moves. So that was another reason that played into why we can look at another more Japanese yen traded pair, just to add it to the arsenal. So y'all keep an eye on that. If you already trading it, good for you. But we definitely about to take advantage of the potential hedge on these markets. Just like I said, S&P are the same way. If I pull up S&P, similar situation, you know. Damn, they're like on some buy and hold type shit. So let's go back to the Australian dollar, do a little top-down analysis just to look at the larger scale. We are closing the month. Let's see where we at on the monthly. Oh, we already closed the month. So yeah, we did close the month on Friday. And this is starting on this daily candle, this monthly. And we started on the week too. Shit show. Boy, it is 20 hours, yo. So, not by much, but just my analysis did prove right. I was going back in history and looking at all the monthly engulfings, and this is not the proper engulfing we would trade, but still what Jay classified as a sandwich engulfing. And that leads to a continuation of a bullish month. So you could wait for a deep pullback maybe after you get a bullish bearish engulfing, and then look for signs to take the continuation of that move. Going forward, that could be like another little tool in your arsenal, especially trading this pair. Yeah, that's basically all we saw. We've gone off of that, and it pretty much worked out. Now going forward, this was set up for a sweet, buttery sale. Like I said, we started the year off January of bearish engulfing on the monthly. And right now, let's see, if I put up the Fibonacci, are we 50% into that range? And we tapped well into 50% multiple times. So knowing this, that would be a good time to probably look for sales right around the 50%. So let's see what the 50% range is to the trade I'm in on buys. Let's take out the drawings. No, let's not take out the drawings. Show everything. Let's hide the indicators. That's it right there. Double check. Yeah, that green line 50%. Okay. So 1 hour. Bam. I'm gonna draw a line on that. And I want to take the fibs off. Let's go back to the daily. Take the fibs off. Then we want to look at the last week. I'll close this gap maybe. If anything. 66.70. See what it look like on a 1 hour. 66.70 is right there. So we already did that. Yeah, I would not be too opposed of going heavy on well, not going heavy, but for sure adding a some more testers on this bullish engulfing, and then looking at the 4 hour. Are we already? Yeah, we're coming from a bullish engulfing already. So this will give you the inclination of where you can add heavy. You got the confirmation on the 4 hour. Did we get a 1 hour confirmation on those lows? No, but this could be the first one. Definitely testing out highs above here at 66.82. And if we break above here, if we break above this area, which is this 50% range of the January's bearish monthlies candle, then we could have a real explosive bullish movement above here. Do I have any more zones? Yes, we do. Got a whole bunch of targets above here. We got weekly zones from the January. We got 4 hour ranges from January. So yeah, we definitely got some areas for profit to be had. So this same scenario right here, we need that to happen right here. Maybe tap into this range before we start seeing some sales. So I'm gonna take this out so we'll know what the yellow line is. We could take this June monthly open off because we did close above that. And did it right here on Friday, 8 a.m. Rejection off that bearish engulfing, bam. Closed above June. That's exactly what we was looking for. So let me take this line off. Probably should have cloned the words. It's all good. Go look at the news in a little bit. Let's see, text. Let's see, change the color. %. Level. Let's see what it looks like on the smaller time frames. So yeah, we need an explosive move. Somewhere up in here, I would say, oh yeah, 12. It would be this candle. Be nice for this candle. See what the 15-minute looking like. It's about to close. Yeah. These next 2 5-minute candles. Yeah. A push higher. We can see some volume added. That would be nice for that bullish engulfing on the 1 hour. So let's pull up the news right quick. And we got Scully up in here. What's up, brother?
What's happening? What's happening, man?
You already know, but pull up this news right quick.
Let's go. Let's go. Yeah, I was tapping in while I was on the road, so yes.
That's what's up. Let's see. Sunday, we did just have news come out. That probably explains maybe the sell-off from that gap that was created. Let's see. Well, it definitely sold off from that point. Kind of filled their range, but I know the market opened off in a gap. I don't know if it's showing on your charts on the Oanda. Actually, it is. Let's see. So we did have news come out today. Japan just had some news come out at 7:50, which is a weird time for news to release, but hey, they got their own thing going on. That's something we're going to be looking at in the future. Monday, July 1st. There's the start of the third quarter, the start of a new month, start of a new week, potentially start of a new trend, continuation of a trend, who knows. But we do have at midnight, got JPY coming out with consumer confidence. USD 8:45, 9 in the morning. S&P Global manufacturing, ISM manufacturing. Followed by that evening at 8:30, RBI minutes meeting minutes for Australian dollar. Tuesday, we got the Fed chair. He said he want to speak at 8:30, so we already know what that's about to happen. It's gonna be a lot of volume come Tuesday morning, followed by the job opening. So that's gonna be a big move, 9 in the morning. Then a double back Tuesday evening at 6 and 8:30. We got Judo Bank Service for Australian dollar and then retail sales month over month for Australian dollar. Wednesday, ADP employment change. What? You see what I'm saying? ADP employment change, continuous jobless claim, and initial jobless claims on Wednesday.
Oh wow, that's crazy.
Jobless claims for a week on Wednesday. S&P Global Services, S&P FOC. Oh boy, it's gonna be a heavy ride. Yeah, there's something about to happen this week, boy, on the charts. That's a damn sure. Like on a weekly, daily. FOMC at 1 o'clock. So we got all morning news, which typically happens on Thursdays, on Wednesday. So we're gonna Keep an eye out for this trend. See if this is a new trend. Wednesday evening at 8:30, we got Australian dollar balance of trade. Thursday, they got a general election going on in the UK. So that might do something to GJ. Australian dollar, news release at 8:30, retail sales month over month. And Friday, NFP. NFP. So yeah, this about to be a doozy. Heavy volume.
Hey, Robbie,
How you like?
I'll be right back. Yeah, but I definitely have a question about that Wednesday news.
All right, bet.
All right, 1 second.
This is the actual charting platform for Oanda. It's the actual broker that we use. I trade Forex. And none of the offshore brokers, they just, for one, it's, of course, with all the regulation shit, but just what they hire risk parameters as far as the money that's allotted to you based on what's in your account, that 500 to 1 on the trade, yeah, it can get real out of hand, especially if you want of course it can, if you're on the downside of a trade. But wipe too many accounts, never wipe. Shit, I still got my original account with Oanda, so that goes to show you, no blown accounts on this side, so we good. Running it up to 25K and then hitting the gas. That's the plan.
All right, I'm back.
Man, what you think about the charts, man?
I think the charts are
Look at the stream. Look, anything you see different? I said, look at the stream. Anything you see different?
Oh shit! Wait, hold on. Wait, what is that?
That's Oanda online computer. Like, not the downloaded broker. This is the web-based broker.
Oh, that looks good. Yeah, I like that. That's the and that's using the TradingView setup.
Pretty much, yeah. It's kind of defaulted to this. Like usually when you download Oanda and you have it on your actual desktop as an icon, you click it. You got to click this little far right top corner to get this type of charting with the icons and all the different things you can do on the side. But yeah, man, it's pretty dope.
Yeah, I like that.
Mm-hmm. The only thing I don't like about it is the this right here when I'm drawing out my my zones and stuff, it don't lock in. So like on you don't have where you can stretch in the middle, basically. Like TradingView does, like right here on TradingView.
Yeah.
You see what I'm saying? Like I could stretch it and it locks in no matter where I go. But that's like some little minor gripe. Other than that, it's so fire. Yeah, man. But yeah, man, what you think about what you heard so far as the analysis and how I broke everything down? How you think we looking?
I mean, let's see what is. I'll load up my charts on my.
I'm thinking this week is about to be a beamer.
Yeah, on the bullish side.
Yeah.
Yeah, I agree. I agree. Yeah, man. Just looking at the weekly, right quick. Had to look at it on a bigger screen, but yeah, it just looks real good for buys. Everything's lining up well. So yeah, just set 67 flat is like the first take profit. See what happens, and see if we can keep on going higher to those 60, 68.5, those type of areas. But we'll see. But yeah, I definitely can see it hit that 67 for sure, just to let us know that we are heading up higher.
Right. Yeah, I see the same thing, bro. Mm, Yeah, I'll probably add to this trade depending on how this 1 hour gonna close. If we get a bullish engulfing, and especially if we break past 66.85. Like if we just close above there, I'm feel more confident in buys.
Yeah, 1,000%.
We got 9 minutes left for this
Yep.
hour to close.
I don't know. Maybe that engulfing can happen at 10 o'clock.
It could. It could. I mean, the bullish engulfing on the 4 hour already happened at the low.
Right. So yeah, this will, like you said, this will be another continuation once we get that signal on the 1 hour. But creating a little mini double bottom if it happens, at 10 o'clock.
Mm-hmm.
Back inside of that consolidation zone that you got. So it's pretty cool to see how it's reacting to those bottoms. So
around that time,
true.
Something
yeah.
formulated.
That's another thing I was looking at to see how it's going to react out of that little small consolidation. Like I said, it's minor as hell. It's really is voided out this consolidation, but I still like to pull it out to just see how wick rejections kind of react off of certain levels and stuff like that. Another thing I noticed, this yellow line I got up here, this is 50% range of the initial monthly bearish engulfing candle that started this whole potential bearish trajectory that we might be going on.
Oh wow.
Yeah, so if I pull up the monthly, go to the monthly, you see right here, January right here, monthly engulfing. And I know market typically likes to kind of trade slightly above, especially if it's still bearish, slightly above the 50% range of a large move, just to run up it, especially if it's not trying to retrace that whole situation and go bullish and try to show rejection wicks and hang around that. So I kind of notated that, pulled up the fibs from high to low, 50%, and that gave me that dotted line. And as you can see, even looking at the 4 hour, see how recently it's kind of just been settling at this area. And kind of really all markets that kind of traded above that were quickly, rejected. It was short-lived above this area. Great opportunity for sales.
Yeah, that was like a little golden line right there.
Mm-hmm. So again, just want to see how market reacts off of that area, especially if we continue bullish. See if it hangs up there, or we just strongly push through this area, because last time we did that was shit. Is damn near never been done yet. And what I mean by that, because all these levels that broke above here started from down here. There was nothing that's starting from here that got the potential to bust through here. So I'm expecting a big explosion move if we do get that. Going back to January, yeah. Nothing that kind of settled around here. Like even this area could have exploded out, but it had to dig back down below, sweep this low to give enough energy for it to push through. So this is going to be a key level. Just going to have to monitor that. Might need some London momentum or some, other type of heavy momentum to really push above there, but we ready for it all.
That's a fact.
Ready for it all, man. So tomorrow's the first, man.
It's going to be a solid full week, an NFP week. I love it.
Yeah.
We got, like you said, we're gonna have some action going on, which is it's crazy. All that stuff is going to come out on Wednesday, but yeah, let's see what that's going to do.
Shit, even on Tuesday.
Yeah, but as far as like the typical Thursday news releases that we were it's coming out on Wednesday, so it's just like, oh, okay, that's new.
Right.
Maybe just for NFP weeks, I guess. I'm not sure. I have to look back.
I don't know. I'm thinking, I don't know. We won't know until about 2 or 3 weeks in to see if they can. But shit, 2 or 3 weeks in to see if they continue with this middle of the week versus end of the week type of play.
That's a fact. That's why it's always good to check the news every week before and every day before you enter as well.
Yeah, man. It's extra manipulation they could be putting over here. You could be not expecting nothing on Wednesday, and then all of a sudden you be like, "What?
Exactly.
Job on Wednesday? Oh,
put a fast one on you."
Mm-hmm.
See, 1 second. Yes, sir. Let's get it. It is looking good.
1 more minute.
One. I like it. I like it. I'm just waiting, man. Waiting for 4-hour engulfings and seeing what I can really go crazy with. So, as far as like those big opportunities that usually happen for me on the 4-hour. So that's the only thing I wait for me to switch. What I've been looking at lately. So yeah, I'm stuck on buys until otherwise.
Gotcha. Stuck on buys till otherwise. I like that. Take a quick glance at some of these other pairs and see if we see anything on the 4-hour.
For sure, for sure.
They're still running up. Yeah. That's a nice buy on Friday so far. I would say AJ probably the only potential play until we get a bullish engulfing back. We need more. We needed to sell off a little bit more, but we got a gap probably we could fill on the EJ. And then GJ.
Where do those gaps come from? Is that just like a monthly gap or something? Just like
That's just a gap in price because the markets don't close. It only close for us. So it was a large amount of trades or orders that pushed the market so fast over the weekend that it couldn't, I guess, really suggest a proper candle structure for it some kind of way, if you will. So it just shows that it opened up there, like just like how it did for Australian dollar. Like the market closed here on Friday, down here, and then opened all the way up here on Sunday, and then closed down here. So it's like it was an actual bullish move. Like you kind of gotta like picture it in your head. Like it was a bullish move throughout that.
Damn,
But
that closed that high.
huh?
Like that bullish movement, like you said, just picture that actually closed because it opened up right there.
Yeah, like some bullish candle closed up here because this one opened up here. Yeah.
Yeah.
But
Okay. I like
you
that.
gotta keep in consideration too, because it's weird because this is Friday, right? This is Sunday. So you mean to tell me this is over 48 hours of 1 hour candles move? Like that's what be making me like, yeah, I don't understand the gap really.
I
You feel
see.
me?
I see. Yeah, that makes sense.
Because the market is open throughout the weekend. You know, it's just retail traders. We don't have access to
Right.
it. So,
Right.
and in a sense, as far as looking at numbers, you would think the gap would be bigger, but that's pretty much where it's at. Yeah, I think crypto might be experiencing a bullish momentum coming off that low and that consolidation I had. I'll show you right quick. Damn! Wait, what the fuck?
Wait, it's at six.
Bro, but I was literally just looking at it and it was around this range. But I know this is early Sunday, but maybe I was looking at, well, I was looking at the daily. Yeah, but still, that's a nice little bullish put. Yeah, I was looking, it was right around here. Last I checked. Damn, yeah. Good buys for Bitcoin. I said as soon as
That
we got to
looks pretty good. That looks pretty good.
Mhm.
Or everything else is gonna run up. So all your other little coins on the side, whatever the ones people be pitching in. So yeah, man, these would be them good little, moves.
Ethereum got a daily engulfing candle.
Hmm, beautiful.
XRP swinging around. Solana starting to swing around. That got a daily engulfing candle. Shiba.
Man,
Yeah,
that's an Nvidia engulfing.
daily engulfing, yeah.
Yeah. Oh yeah. Damn. This shit works.
Oh, man. That's that. Yeah, just gotta wait and play it out. See what happens, man. I guess going forward, we'll kind of keep each other updated on the other pairs that we can like hedge on as we go throughout the week. The buys there.
Can those Jappy pairs start to turn around?
Yes.
Or no, those two. Okay.
But guess what's gonna have to happen?
What?
They're gonna have to start raising their interest rate like no other.
Okay.
Guess what's gonna cause that to happen? The economy gonna turn to shit. As of now, that ain't happening.
That ain't no time soon. Yeah, that's a fact.
So yes, you are right. Yes, all these markets could turn around and start going bearish and just have the biggest sell-off. But guess what? We gonna be ready for that though. I'm gonna tell you that. Tell you that much. We gonna be ready for that move.
Bam. Yeah, that's an easy clean. Jeez.
So these will be like some areas I'll be looking to add on some of these Japanese pairs. See if we can get them. We might retrace down that low, we might not, but that'll be a good area to be patient enough to wait to buy into. I would just probably put some mini buy orders like halfway through this range on all these ranges, kind of like just see what they do. That'll be a nice little hedge. Cause yeah, that's exactly what it's gonna take, bro. But it's gonna take the interest rates. It's gonna take our interest rates to start dropping, you know, and theirs to increase. So yeah, I don't see that happening in the foreseeable future, especially
That's,
not in this current presidency.
I'm about to say for our shit alone, for sure.
Facts. We still trying to pour water on the fire out here, let alone be worried about interest rates. I know mom had text me a couple of days ago talking about some what she had text me. Let me see. Something about some stock stuff, like just sending me a stock to look into. She said look into Samsung subsidiaries.
Shout out to Moms, man.
She text you that too?
No, I'm just saying, shout out to Moms. Just
Nah, yeah, shout out to mom for sure. All day.
putting out some stock.
Uh, she was like, look into Samsung and their subsidiaries. So since mom want to throw out a stop here, let's just throw up Samsung. I don't know what their stock ticker is. And that don't look right. What is Samsung stock ticker? Samsung Electronics Co. Limited. KRX. Is it KRX or KRW? Y'all shit, man.
It looks like KRX.
I know. I'm saying KRW, KRX. I'm gonna check KRW. stocks. I mean, KRX.
Searching stocks only instead of all.
Kingspan.
What? What's that?
No, I'm just saying that's what came up for KRX.
Oh, I'm about to-
I think it's KRW, Samsung. Just don't look right.
yeah, they don't. None of that shit look right.
I mean, it is a publicly traded pair, isn't it? Hmm. Yeah, weird. Oh, they on a KSE. Got you. That's why we can't find their ass. They're
Yeah,
on the
they are.
Korean Stock Exchange. KSE.
Oh,
So
it was on there though, huh? So
well, you're
hit
right. Yeah. So,
KRX.
yeah. What was it? KRE or KRX?
KRX. Yeah, right there. Any one of those because it's all.
I don't want gold spot. Let me just type in Samsung.
Samsung Electronics or whatever. Stock KRX. What's that?
Right here.
No, three down. Samsung Electronics. Down. Under Biologics. Samsung Electronics.
Oh, right here.
Yeah.
But I know the stock ain't 81,000.
Yeah, no, it's probably 81.
Oh, yeah, you're right. You're right. You're right. This
Korean,
is this is in
Korean, whatever.
yeah, you're right. You're right. You're right. You're right. Well, I think she probably was sending that due to all this AI hype. Probably was talking about computer chips and how they
Yeah,
about
I
to
mean,
start making.
he probably has a Samsung, like, all your, your Android-based phones. 9 times out of 10, majority of them are coming out of Samsung, and they're
Facts.
doing big things.
Big facts.
One would say invest into all of them.
I would be one of those people.
Your Samsung, your Apple for damn sure. So,
Facts. Especially after looking at, of course, looking at the company, seeing how they look on paper.
yes.
Because you already know, even if you buy the product and you love the product, it's not always a good investment.
That is a fact.
Shit. Anything else you wanna discuss? Anything you see? Anything on you?
No, I mean, right now, we're just playing around. I will put stops um, at 6 between, I don't know, if it takes out that bullish candle that just closed at um 9 o'clock or whatever, which is like what 66.65. I'm gonna put a stop right there from my order that I had from last week, and
I got you.
just start the day off like that, which about to take me out. That's what it's looking like. So we shall see.
Right.
We shall see, man. But yeah, I'm gonna just go ahead and do that for now and let that play out, and continue on about my day. I mean, about
I got you.
see what else happens. But other than that, um, yeah, man. I mean, it's fairly simple with me now. It's just waiting on the 1 hour engulfing or the 4 hour engulfing. Everything else is targets. As far as like after I enter, it's the only time I'm really going to look at those larger time frames. Of course, I got to look at my zone to see where I'm at. Marking the daily highs and lows, it helps out with targeting, but you still
Right.
got to find your entry first. So I like to do that first, or wait for those signals and those setups to happen and taking them from there. But yep, still been riding the 4 hour engulfing since last week, so turned out really well. And if it drops below, like you said, 66.65, I'm getting out of it, and then I'll be prepared and have a little most of my soldiers to go to war this week
Facts.
because we're gonna have some action. So yeah, I want
Nah.
to be well prepared. What
And
about
with
you, man? What you got?
Yeah, I was about to add to that. With that action brewing, we actually got as you can see, we got clean traffic to the left for the most part. So we do have a lot of room to sell. So don't get that out of your head just in case, even though as traders, we like to we'll analyze and sometimes analyze ourselves out of a bias. So like I was doing earlier today, I kind of broke down the reason for a bullish bias overall that I could see the market would probably tend to lean more towards. Not to say though that before that happens or if that happens, we might get a sell-off. And that sell-off may not be a true sell-off. Like it might not be, go heavy on a sell trade and just kick back. Like it might just be a nice retrace so you could get a better entry on the buy. So we I'm still leaning on buys. Um, I'm looking to add buys, but of course, the 4 hour and the 1 hour engulfing trumps pretty much all I say. It's great when it goes in the main trend, but we all know sometimes that don't happen. And not only sometimes that don't happen, you like, of course, you want to go in the direction of the main trend. That's ultimately what we doing as we increase our equity. But overall, if you know that the market is going bullish and you get a bearish 4 hour golfing and a bearish 1 hour engulfing, that's not to say that it's not money to be had on the bearish side. Like just because the market is pushing higher, don't necessarily mean you just got to sit on the sidelines and not trade that sell if it's an opportunity. At this point, I don't see that opportunity setting up, but if it was, I would take that sell probably down to this zone down here around 66.50 and look to add, the buys, especially if we get rejections and we start to get bullish engulfings down in that area. So
Would you still enter that? Like, would you wait for that setup to happen on the same time frame? Like for me, 1 hour, 4 hour, or would you look for those opportunities to happen on a lower time frame?
I would look for
Would you
the
scout down
very
into that? You know what I'm saying?
I wouldn't go to the lower time frames until I get a bullish engulfing in this area. If I'm looking to trade in this area, I need to get a bullish 4 hour and 1 hour engulfing coming out of this range. And then once I see that scenario set up and I'm starting to see it leave this area, that's when I could jump into a smaller time frame, because a smaller time frame is still going to show me a good area to where I can go in the bullish move. But the smallest time frames would tend to retrace again with a big wick or do some dumb shit on a big wick. And then I could get back in as if I was getting in off that 1 hour or 4 hour engulfing, because the 1 hour and 4 hour happened down here. And after I got the confirmation, I'm dropping down the smaller time frame to get that sniper entry, because I'm coming out the confirmation off the 1 hour and 4 hour engulfing, so I can be confident in that entry.
I got you. Yep, I like that. I love that. I do this. Yep, I do the exact same thing. Yep.
I don't want them to really shake me out. So
I was just about to say that. It's good to be fluid, but trying to do the river rapids, and just hit every dip side, like, and you, if you can do that, that's good. But yeah,
not recommended.
Yeah. It shouldn't go along with your trading, unless if you like to scalp within bigger trades. So, but that's one thing. That's next level shit. Right. Similar to what you do, like you'll have an account that you'll just rock a big trade on bias, and then you'll scalp into that move on another account.
Right.
I would rather do that instead of just trying to every single opportunity trade
situation.
Mm-hmm.
Because it's certain trades that I can't exit out of, that I may be in, on certain accounts. So yeah, I feel like it's smart. I mean, it's there for a reason. You can create sub accounts. So I feel like it's smart. You could have one account where you just taking all sales on, so you don't have to worry about changing your bias when you're staring at this certain account or this certain risk or position you in. You could just only look for opportunities to add to the buy or add to the sell versus on what account you're looking at. But still in all, like I said, typically, and probably going forward in the future, especially once I get up to like 25K and beyond, I'm pretty much I have one account where I'm going long and short from, because I don't see a scenario in Forex where you would need to enter a trade in January and you have to lock up an account to hold a sell position just because you want to catch the whole year. Like, that's not that type of scenario works better with stock market, because you get more value out of you holding it.
I'm about to say, yeah, that sounds like a leap option.
Yeah, we don't get no value out of holding Forex trades unless
It doesn't move that way.
It don't move that way, and it's no ownership in that. Like I said, the only thing that you get paid for holding a trade is if you hold in a profitable trade every close of the daily candle. So if you got a profitable trade and the daily candle closed at 4 o'clock, you will see interest payments come into your Oanda account.
Oh yeah,
it'll probably be pennies, but once you hold in 10 million units, and it's a damn $20,000 trade, and that it could be hundreds of dollars. You could be paying yourself with that shit.
That is true. Yep.
So that's your form of dividends, if you will.
Mm-hmm.
But still, in all, dividends pay out way better in the stock market than Forex. Like I said, you would have to be trading like hedge fund monies amounts, like hundreds of millions of dollars to billions of dollars, to see some interest payments that could really be like, oh, I could buy a car with this interest payment. Yeah, that type. But yeah, sir. Yeah, bro. I guess if it ain't nothing else, we could wrap it up, and we will monitor this and touch bases either later on tonight or first thing in the morning to see how, especially how we're reacting out this low. Because I know you say you just moved your stop loss, so
Yep. Almost got taken out. So yeah, we'll see. I mean, this can be a continuation, a sell to happen. Just to set us up for something else. But yeah, like I said, man, just waiting for that to happen. If it does drop down into that, I'm not gonna be looking to get in so it can drop down 20, 30 pips. Like now I'm looking for the move that's gonna happen over 2 days, 100 pips, and I happen to catch 75 out of the 100. So it's one of those type of moves that I want to get. So just patience, and yeah, man, we about to go into this second half. So yeah, you already know what time it is. The third quarters be ridiculous.
nah, facts.
Like Warriors.
Big facts. Yeah, man. Well, shit, we gonna exciting week. We got a lot of news, a lot of volume. So be cautious, everybody, with your with the news events and trading. It's about to be wild. So with that being said, y'all tap in, Telegram, tap in again every Sunday on live, and we'll keep doing this shit. All right,
So
brother.
everybody be safe, be good. Yeah, we're gonna get it in this week. And yeah, I'll let me, brother.
All right, bro. Peace out.
Peace.